Namaskar and hearty welcome to Bhartiya Bank Coaching Center. I'm Paritosh Purkayastha here. In part 1 of KYC AML CFT presentation, we discussed the basics of KYC AML CFT, customer acceptance policy, risk categorization, etc. In part 2 of our KYC AML CFT presentation, we'll dive deeper into customer integration procedure, customer due diligence for individuals and non-individuals, use of Aadhaar in KYC, ongoing due diligence, suspicious transactions, and other specified transactions reporting obligations, compliance responsibilities under PMLA, etc. Customer identification procedure. Customer identification procedure is applied when a new customer account is opened, an international wire transfer is conducted by a non-account holder, there is doubt about the authenticity of existing customer information, a transaction involves the sale of a banking product worth rupees 50,000 or more, or a working customer conducts a cash transaction over rupees 50,000. Banks must remain vigilant about structuring of transactions in attempt to avoid threshold limit detection. Customer due diligence for individuals. Customer due diligence for individuals requires a recent passport size photograph, PAN or Form 60, and any one of the 6 officially valid documents called OVDs. These are passport, driving license, voter ID, Aadhaar, Amendega job card, or letter issued by National Population Register containing name and address of the customer. These forms help verify the identity and address of the customer. The information must be current, free from inconsistencies, and verifiable either through web check-in or directly from the issuing authority. Customer due diligence for sole proprietorship firm. For sole proprietorship firm, in addition to the above mentioned documents, as a proof of business activity, any two of the documents like registration certificate, license issued by municipal authorities or professional bodies like Institute of Chartered Accountant, Institute of Cost Accountant, etc., complete income tax return, GST certificate, certificate issued by professional tax or other tax authorities, importer-exporter code issued by DGFT, utility bills, etc. Customer due diligence for non-individuals. For entities like partnership firms, companies, trusts, societies, clubs, etc., customer due diligence requires verification of registration document or documents to establish the legal existence, resolution of the board or managing body to open the bank account, and the name of the persons authorized to operate the account along with the power of attorney in their paper to operate the account. PAN or Form 60, as the case may be, proof of address and identification of the beneficial owners and that of the persons authorized to operate the account. Other specific documents like partnership deed for partnership firms, memorandum and articles of association for companies, trust deed for trusts, bylaws for clubs, societies, etc. Use of Aadhaar in KYC. Aadhaar can be used for KYC in two formats, online and offline. Confirm digitally sent demographic data of the customer. Demographic data means name, age, date of birth, mobile number, address of the customer. Online verification includes biometric or OTP-based eKYC authentication with UIDAI servers. It ensures quick, authenticated, and smooth verification of the customer. Offline verification, on the other hand, includes Aadhaar copy, QR code scan, or XML file download from UIDAI by customer. Aadhaar is voluntary and must only be used with explicit consent of the customer. Customer can offer any of the 6 OVDs as their identity. So it requires physical presence of the customer to ensure face-to-face verification. Masked Aadhaar should be preferred for privacy. Video KYC of the customer. When a customer cannot visit the bank for face-to-face verification while onboarding, video-based customer interaction procedure or VCIP can be done, which allows the bank to perform real-time consent-based customer verification through a secure video call. It must be recorded and geotagged to ensure the customer is located within India. The process includes live photograph capture and document validation for CDD purpose, ensuring that interaction is genuine and recorded as per RBI guidelines. OTP-based eKYC for non-face-to-face customers. Let's understand the conditions for opening accounts using OTP-based eKYC in non-face-to-face mode when the customer cannot visit the bank or video verification is not possible. Some restrictions in the transactions are imposed, like deposit account balance should not exceed rupees 1 lakh and total credits in a financial year must not exceed rupees 2 lakh. Only term loans up to 60,000 per year may be allowed. Verification in these accounts must be completed within 1 year, failing which that account should be closed. A self-declaration from the customer is required that no other such account exists with any other bank, and strict monitoring for compliance must be ensured. Transferability of full KYC accounts. When the permanent address of a customer, as mentioned in the official valid document, is not changed, but the temporary address is changed due to transfer or posting, his full KYC accounts verified by one branch of a regulated entity can be freely transferred to any other branch or office of the same institution, provided KYC is up to date and not due for periodic review. A new temporary present address should be intimated by the customer to the bank. No supporting documents are required. The same principle applies if he wants to open a new account in his new place of posting. Officially valid documents, change in address verification. Now, if the officially valid document submitted lacks the current permanent address, that is, the permanent address has been changed, the documents like utility bills, municipality tax receipts, pension payment orders, and accommodation allotment letter from employers like government, PSUs, banks, financial institutions, listed companies, etc., can be accepted for address proof temporarily. The customer must submit an OBD with the updated current address within 3 months. Name changes, if any, in OBDs must be supported by marriage certificates or gazette notifications. Opening account without official valid document. Suppose a villager from a far-flung area has come for opening an account, but he does not have any official valid document. Can we open such accounts? Yes, as per the RBI guidelines, accounts may still be opened as small accounts to ensure that he is financially included. These accounts require a self-attested photo and signature or thumb impression in presence of a bank officer. They have strict limits on balance, credits, and withdrawals. Foreign inward remittances are not allowed until identity is fully established. Monitoring and escalations are required in case of any suspicious activity in such kind of account. Now, as already mentioned, small accounts are subject to some limits. Total annual credits should not exceed rupees 1 lakh. Total monthly withdrawals from all sources should not exceed rupees 10,000, and maximum balance at any point of time should not be more than 50,000. Exceptions applied to government social welfare benefit credits like Prime Minister Awas Yojana, old age pension, farmers assistance schemes, etc. Different social benefit schemes proceeds. These accounts are valid for 12 months initially and is extendable for another 12 months if proof of application for OBD is submitted by the customer. Maximum period is 24 months. KYC for new technologies and digital products. KYC norms also apply for new technologies and products like credit cards, mobile wallets, smart cards, and online banking. Regulated entities must assess money laundering risks before launching such products and apply suitable due diligence, which should also be applied on agents outsourced for sale. Ongoing due diligence. What are the key checks? Banks must continuously monitor and ensure that transactions match the customer's profile, income source, and business nature. Watch for inconsistent patterns, high turnovers, transactions exceeding threshold limits, deposit of third-party instruments followed by cash withdrawals, and unusual activity in marketing firms or multi-level company accounts. Enhance due diligence for high-risk accounts. Non-face-to-face customers must make their first transaction for an existing KYC-compliant account with some other bank. For politically exposed persons or PEPs, senior level approval, full verification of their identity and sources of fund, including that of their family members, close relatives, associates, should also be done. All such accounts are subjected to continuous enhanced monitoring. Now here let me clarify that politically exposed persons, PEPs, means prominent public functionaries in a foreign country, heads of state, governments, senior politicians, senior government, judiciary or military officials, senior executives of state-owned corporations, important political party leaders, etc. Simplified due diligence for self-help groups. For self-help groups, customer due diligence for all members of the group is not needed while opening bank accounts. Customer due diligence of office bearers is sufficient and no additional due diligence is needed even when providing credits to such self-help groups. Central KYC Record Registry, CKYCR. CKYCR managed by CERSI is the central digital repository of KYC data. All regulated entity must upload digital KYC data for individual and entity accounts with CKYCR. The process started in scheduled commercial banks since January 1, 2017 and in cooperative banks since April 1, 2017. Secrecy obligations and sharing of information. Customer information collected during account opening must be kept strictly confidential and used only for its intended purpose. It should never be shared for cross-selling or other regions without the consent of the customer. However, disclosure is allowed in some special cases, like when it is required by the law, when there is a duty to the public in the interest of the bank and with the customer's explicit consent. It's essential that all bankers handle such information responsibly and ethically. FIU-India return submission schedule. Let us go through the schedule for submitting mandatory returns to FIU-India under the PMLA framework. Suspicious transaction reports, STRs, must be filed immediately within 7 working days of identifying a transaction as suspicious. Immovable property report, IPRs, are filed quarterly within 15 days of the quarter end for any sale or purchase of real estate valued at 50 lakhs or more. Besides that, the following 4 reports are required to be submitted monthly within 15 days of the succeeding month. Cash transaction report, CTRs. It covers cash deposit or withdrawals totaling rupees 10 lakh or more in a month. Counterfeit currency report, CCRs. Counterfeit currency report, CCRs submit details of fake Indian currency detected during bank operations. Cross-border wire transfer reports, CBWTRs, are required for international fund transfer of rupees 5 lakhs or more, whether inward or outward. Non-profit organization NPO transaction report, that is NTR, it informs transaction involving receipts by NPOs of value more than rupees 10 lakh or equivalent foreign currency. Timely submission of these returns is essential to ensure compliance, support national financial intelligence, and avoid penalties or regulatory scrutiny. Action by FIU-India for reporting delay. Each day of delay in reporting or rectification counts as separate violation. FIU-India may issue a show cause notice, conduct hearings, impose monetary penalties varying from rupees 10,000 to rupees 1 lakh are violation, and further escalate the matter to RBI or other regulators. What is suspicious transaction? A suspicious transaction includes any transaction, even attempted ones, that seems to involve proceeds of crime, lack economic rationale, appear inconsistent with the customer known profile, structured to evade reporting thresholds, or appear unusually complex. For example, during Notebandi times, there was some unusual deposits in PMJY account, which was reported by the banks to the FIU-India, and FIU-India, after confirming, has referred the matter to ED or CBI for further verification and necessary action. Any suspicion of terrorism financing also qualifies. Such transactions must be reported immediately to FIU-India without informing to the customer. Wire transfer reporting, key data required. Wire transfers must include full details of sender and recipient, account number or reference code, transfer amount and currency, date, purpose, and intermediary banks details. Intermediary banks must ensure originator information is retained. Missing originator data must be reported to FIU-India. KYC rules for selling third-party and owned products of rupees 50,000 and above. Any transaction of rupees 50,000 and above involving third-party or owned product sales, working customer identity and PAN must be verified. Payment should be accepted only via debit to bank account or through checks. These rules applied to sale and reloading of credit cards, prepaid cards, and any other financial product for rupees 50,000 or above. Summary and compliance culture. To summarize our learnings, KYC, AML, and CFT are more than regulatory requirements. They form the ethical foundation of modern banking. Compliance must be embraced at every level with timely reporting, accurate documentation, and proactive risk assessment. It starts at the branch level with alert and aware staff. Here, I want to emphasize that we, the bankers, are the financial guard of the country. As our dedicated armies are guarding our borders continuously, facing extreme risks and troubles from weather and threats from the enemies. And that is why we, the citizens, are safe and secure here. Similarly, we, the bankers, being the financial guard of our country, should be continuously vigilant and responsible for safeguarding the financial safety and security of the country against all vulnerabilities. Because the country's safety and security should be given the topmost priority. If the country is not safe, all our life and property will not be safe. Like we observe currently that is going on in some war-inflicted countries around the world. Thank you for watching part 2 of our KYC AML CFT series. Please like, share, and subscribe to Bhartiya Bank Coaching Center for more such practical lessons. Stay informed, stay compliant. Wish you all the best in your banking.